Hello everyone, and welcome back to the channel. Today, we're diving deep into the currency markets, specifically looking at the EURCAD pair, which has been making some interesting moves. Let's get right into it. The EURCAD has been on a noticeable upward trend, ticking up to the 1.6160 area. A big part of this strength is coming from the euro itself, which has been trading on a higher note against the Canadian dollar. This isn't just a random fluctuation. There are some key market drivers behind this movement that we need to unpack. First up, let's talk about the European Central Bank, or the ECB. Last Thursday, the ECB made a significant announcement. They decided to hold interest rates steady. This wasn't a huge surprise to many, but what was important was their messaging. They strongly reiterated that their future decisions will be entirely data-dependent. This means they're not pre-committing to any specific path for interest rates. Instead, they'll be watching economic data like inflation and growth very, very closely before making their next move. Now, what does this data-dependent stance mean for the euro? It introduces a bit of uncertainty, but it also signals that the ECB is cautious and won't rush to cut rates if the data does unsupport it. This cautious approach can be seen as supportive for the euro in the short term, as it pushes back against market expectations of aggressive rate cuts. Several ECB officials are scheduled to speak soon, and traders will be hanging on their every word, looking for any new clues about the future of monetary policy. Any hawkish or dovish undertones could definitely sway the euro's direction. Switching gears to the other side of the pair, let's look at the Canadian dollar. All eyes are on the upcoming Canadian monthly retail sales data for October. The market consensus is that sales likely remained flat, showing zero growth. If this turns out to be true, or if the numbers are even weaker than expected, it could spell trouble for the loonie. Weak retail sales would suggest that consumer spending is slowing down, which is a key indicator of economic health. A softer economy could prompt the Bank of Canada to consider cutting interest rates sooner rather than later, which would naturally put downward pressure on the Canadian dollar. So, to sum it all up, we have a euro that's finding support from the ECB's cautious wait-and-see approach, and a Canadian dollar that's facing potential headwinds from possibly weak economic data. This combination is what's currently fueling the EURCAD's climb towards that 1.6160 level. Of course, the market is always dynamic. The upcoming ECB speeches and the Canadian retail sales report will be crucial events to watch. They will likely be the next major catalysts for this currency pair. That's all for today's analysis. What are your thoughts on the EURCAD? Let me know in the comments below. If you found this video helpful, please give it a thumbs up and don't forget to subscribe for more market updates. Thanks for watching, and I'll see you in the next one.